Okay, good evening, everybody. I'm Councillor Gonzay and I'm the chair of the Pensions Museum.
Ian wants to says 12 minutes. You probably spend longer choosing a new.
Please note that this meeting is recorded by the council for live and subsequent broadcast via the council's internet site. I'll begin by asking members to introduce themselves, starting with the vice chair.
Councillor John Bevan, Northumberland Park, Vice Chair of the Pensions Committee.
Councillor Highness.
Hi, I'm Councillor Cunningham, Council.
Councillor White.
I'm Matt White from Tottenham Central Council.
Mr. Alwarish.
Ishmael Alwarish, employee representative.
Mr. Plowright.
Randy Clowright, Council. Employee representative.
You, Mr. Pattinson.
Ray Patterson, employee representative.
We have both Councillor Inge Curran and Keith Brown have given their apologies, but they're attending virtually and so they're not voting. And can the officers introduce themselves, please, starting with you two?
Tim Paul, Head of Pensions and Treasury. I'm here, Harry.
Thomas Skeen, Assistant Director of Finance, Harringay.
Representatives from Wellston,
Alex Gavage, the Investment Advisory Team, Nelson.
Independent Advisor,
John Bozeman.
And Fiona Ray, Clerk to the Committee.
and Mr. Uziki, is that how you pronounce it?
Users.
Uzis.
Users, principal lawyer, legal advisor to the committee.
Thank you. Apologies have been received from Councillor Nick Da Costa. Apologies have also been received. Oh, I've already done that. There have been no, on item 3 on the agenda, there have been no items of urgent business, but a late report in relation to items 13 and 18. Under section 100B4B of the Local Government Act 1972, I am of the opinion that the report should be considered at the meeting as a matter of urgency by reason of special circumstances. These circumstances are that the current contract for the pensions administration system is due to expire on the 31st of July 22. Due to the tight schedule that was required in order to properly undertake the procurement exercise, the report was not available at the time of agenda publication. It is requested that the report be considered by the Pensions Committee and Board at its meeting on the 12th of July 2022 to ensure that contractual arrangements are in place when the existing contract expires. And we'll come on to that in due course. Declarations of interest. Do any members have any declaration of interest or conflicts of interest to declare? Okay. Deputations, item 5, deputations, petitions, presentations, questions, none received so far. Item 6, record of training undertaken since last meeting. Do we have any training undertaken since the last meeting? Can you update us?
So, Chair, yeah, just for the record to say that we've delivered the pensions content training, induction training to all the members. So one training was done on the 28th and the other one's just been done prior to this meeting.
We go on to item 7, minutes. Does anybody have any comments on the notes of the informal meeting on the 15th of March? It's informal because it wasn't for it. And the minutes of the meeting 27th of April 22. And whether we can agree the minutes. Go ahead, John.
Can I just ask a couple of questions? He talks about new staff recruitment and appointments will be made in April 2022. Can we be advised of the process that was made? And then also it refers to 2 boroughs who are refusing to sign the new arrangements for the London SIP. Can you tell me what those 2 boroughs are, please?
Can you answer those?
So the first one I necessarily provide an update on the process. So yes, we did conduct the first, I was calling the first phase of the recruitment process. Just to give a bit of background to the committee, we had a long-standing pensions manager who retired last year, and we've had a few other members of the team also who alongside who retired around the same time. So we've been undertaking a recruitment exercise for the council. So I'm pleased to say that we've actually been able to fill the post of the pension manager. So Jamie Abbott, who is unfortunately not able to join us this evening, he was here for the last training we did on the 28th. He now joins us as a permanent member of the team. We've also added some further resource in the way of 2 pensions officers who will be helping with the day-to-day management of the team. But there still remains about probably, I'd say, 2 or 3 more posts that we need to go for the program, which we will be doing in the next 2 weeks or so. In terms of the second question on the land reserve, the latest update we have on the land reserve is that there are 30 barrels assigned. The other 2 have not been named, but we can speculate as to who they are. I don't think I can go on record and say who they are, but there are 2 barrels that are still having some dispute with the land reserve based on changes to that. I can also have a discussion with you about that, but I don't just say.
Thank you.
Can we take the minutes as agreed then? Yeah. And we go on to item 9, which is retention fund quarterly investment performance update. Can I now invite officers to introduce the report?
Thank you, Chair. Happy to introduce this report. So this is the quarterly update report that we bring to this Change Committee and Board on a quarterly basis. Essentially provides a summary of the market performance for the fund, but it also includes some other different sort of updates. I think one of the ones we just covered relating to the land reserve, and also one that I'll get to later relating to the progress we've taken regarding the external audit update. So just to say on section 6.1, the independent advisor, John Mason, has written a report on the general market context. We won't discuss it at this time, but if you have any questions, I'm happy for those to be taken. The main things to highlight to members is as of the 31st of March 2022, the funding, the market value of the pension fund was 1.795 billion. This was also an increase of 1.6% from December 2021. The main reason behind this was the risk of the economic uncertainty outlook, with central banks starting to raise their interest rates. We've got Mesa, Alex from Mesa, who will be able to probably give us a bit more of an impact about what the market looks like. But before we get to that, just to point to members to the portfolio asset allocation in table 1. This basically just shows how the fund is split and how its current size and how it compares to the strategic asset allocation. The key thing to update members from an investment perspective would be the decision that was made by the committee and board on the 15th of March and probably made in April was to invest an additional 30 million into the Aviva Line Property Fund. So I'm pleased to say that that progress has been made. We've actually invested about 28 million into the fund through secondary market transactions. Alex, if you'd like to say a few words about that, that's okay too.
Thank you. Yeah, so I guess if we think about the decision at the last meeting, we wanted to allocate 30 million of additional capital to Aviva. There were 2 options that we could have taken. So we could have joined the queue, which is something that we've done a couple of times historically. That would be expected to take about 9 to 12 months to draw down capital. And so it was agreed that we would explore a secondary market transaction with 1 or more sort of property brokers. And so as a result, we spoke primarily to a broker called CBRE Property Match, who are linked to CBRE, who are your existing property manager. And there was quite a lot of demand for the sort of transaction that we were looking for. So the sellers in the market who, for example, were looking to de-risk their investment strategy. And so we're able to offer some liquidity in terms of the units in the property fund. In terms of pricing, what we said at outset is that we would like to try and get a price which was equivalent to a 6% increase relative to the net asset value. And the reason why we were comfortable with that is because by trading on the secondary market, you don't incur transaction costs when you go into the fund. And so you're basically paying the same amount on the secondary market as you would do if you waited in the queue. So it was considered that if we could actually trade quicker on the secondary market at the same price, that would be a good outcome for us because we would start to earn returns straight away as opposed to having to wait. And so as Tim said, we were fortunate, I think, to be able to find a couple of trades quite quickly. One was about sort of 5 million, one was a bit larger, so about 23.5. Both of them were about the price that we were expecting, so the 6% above NAV. That includes all the fees that are charged by the property broker, so it's a sort of comprehensive figure. And we are now sort of deployed in terms of the additional money, and it took us, I think, a couple of months in total from the decision being made. So no, I think it does mean that as of today, we should be pretty much in line with what we wanted to be in terms of our allocation to property, which does provide us with, for example, some exposure to inflation, which will help protect us from the current market environment. So yeah, I think it has been a positive exercise to go down that route as opposed to joining the queue.
Yes, that's the one.
Thanks. Yeah, so in this property investment, what actual property are we looking for? What physically are we investing?
Yeah, so it's a good question. So we have essentially three different ways that we access property in the portfolio. So the CBRE mandate is what we would call a sort of core commercial property portfolio. So that's the usual things that you might expect, offices, for example. The Aviva portfolio, which we've just gained an additional £30 million exposure to, that is what we would call long lease property. And so rather than being focused on capital appreciation of the value of the underlying properties, you're investing in assets which have long leases, so 20 to 30 years in total. And so the majority of the returns that you receive on your portfolio come from income. So it's considered to be a more defensive approach to property market investing because you've got that income focus and you do tend to get inflation linkage on the leases that you have in the portfolio. So that is a subtle difference. The London fund, we do also have some exposure, obviously, to property within London as well. But at the moment, we haven't deployed much capital into that portfolio. So primarily at the moment, it's CBRE and Aviva, with Aviva being a more defensive portfolio as of today.
Thanks for that. So I do recall a couple of years ago there was some consideration that we made about investing in property with a kind of hope to have some kind of social impact. And I know, we had some discussion with some fund managers. We were talking to some other boroughs, I think, for instance, Newham, Islington. That's still being worked on?
Yeah. So when we did the paper on the property portfolio earlier in the year, we did consider social housing as one of the options because, as you say, we did meet with CBRE and Elgin a couple of years ago to understand their offerings. The reason why we chose the approach that we did take is because it would take quite a long time, so possibly a year or more, to actually start deploying capital into the asset class. And we wanted to make sure that we were in line with our allocation to property. And so we said we would take the approach with Aviva to try and deploy capital, but we definitely want to keep on the table social and affordable housing. Now, with the actuarial evaluation as of 31 March, the natural next step, once you've kind of had the initial results of that, is to do an investment strategy review. And that's what we did in 2020 as a result of the last actuarial evaluation. And I think it's definitely on the table as something that we would consider as a possible strategic allocation within the fund to social and affordable housing, particularly seeing that since we had those presentations from CBRE and Elgin, the market has developed significantly. Lots of other funds have started to make allocations. The amount of fund manager options which are investable is a lot higher. And so it's definitely something that is worthy of our consideration, particularly, and it's kind of stealing some of John's thunder here, but if there is going to be potentially the requirement to have sort of 5% of assets in local investment, then this is something that might fit the bill quite well. And we are seeing some of the boroughs look at this sort of mandate to try and fit that kind of that agenda. But obviously, there's now the uncertainty.
So is the investment that we did make into the London Fund, which was, I think, last year. One of the primary drivers for that was making the social impact in London. So that is the part that we're impacting as well. Also, that's a small allocation within the portfolio, so we can add more things to
That's,
Yeah, so the social impact in the properties that we've chosen, or this company chooses. In the property world, there's a great demand for really green buildings that are definitely energy saving stuff that can be refurbished. So are we involved in that to a certain extent? And then the second bit is the hot thing in property now is warehouses, distribution depots and all that type of thing. Are we exposed to that with this investment?
So, I mean, in terms of your first question, as for them in terms of the green buildings, Aviva, who we've just allocated the 30 million to, we rate them quite highly as a manager in terms of the incorporation of ESG factors. And they are essentially responsible for making changes to buildings in the portfolio. And one of them will be to make them more environmentally friendly. So, although the portfolio is not specifically designed with an objective in mind around environmental factors, that is something that they are actively doing. And that said, that's another area whereby the social and affordable housing allocation could potentially be quite attractive, because we're seeing where there are new builds, which are sort of being built by asset managers, they are taking the opportunity to start from scratch and put in place environmentally friendly buildings as a result of that. So that it's not an explicit objective at the moment. It is something that's considered. And again, that's another potential attraction for social. In terms of second allocation, the portfolios that we have both for CBRE and Aviva are quite well diversified across the sector. They have a lot of underlying assets. So it wouldn't surprise me if they did have some exposure to that sort of asset. But I don't have the exact breakdown with me. I could follow up with that from Aviva and CBRE.
It'd be interesting.
Does have distributions into
I've got a couple of questions actually. I wondered if the whole thing with the London SIV, they're not getting 32. Is there any way they can change that? At that sort of
I think when we did the update, when this became, we were sort of made aware of this issue back end of last year, they did evidence that this was a very complex issue in terms of getting it through. So the boroughs, from my understanding, who raised these concerns, they've raised real concerns and they're seeking legal advice as to whether they should sign the agreement or not. Obviously, we're not privy to the conversation that they had it, but I understand that it's a serious sort of, like they're not happy with having to change that agreement or how that agreement looks. So I think this is one of the things we did point out to the committee, that this wasn't an issue. It was going to be the top of the London SIV to get all 32 boroughs to agree. They've done well to get 30, to be fair. But I think those issues, the London SIV will have to advise. I think that there is an AGM later this week where they're probably shedding some more light. But so far in our conversation with them, we haven't actually given me an update. So I think in the spot, the update I did point out to say that we haven't received any update from the London SIV regarding how that issue has progressed.
and the other thing is just a small thing. You mentioned Hyman's, Robertson, LGPS online training. Are you going to set us up to do that?
Yes, I think when we get to, that was one thing I was going to bring up to the forward plan area, whether that's something that members would be interested in. I have spoken with Hyman's prior to this meeting, so I have had an excitement to get offering. But members would be happy to do so. I'll be happy to put that.
Yes, that's
Do we have to pay for that training, or is it free?
It will cover the cost. It will cover the cost of the fund.
I think the local government association does entry training as well, which costs us nothing. Whether it's exactly the same type of thing, I'm not sure.
So I'm also happy to sort of have a conversation with the chair and sort of show what the system is like. From what I've seen, I think it will be really good for members in terms of keeping the knowledge up to date. I'm supposed to put in a lot of work into setting this up, so it's not going to be free. I don't think the cost of that.
Doesn't mean to say.
Yeah, I'm not going to say the cost, but I don't think the cost is would stop us from going ahead and would be obstructive for us training. I think the benefit members will get from that would be justified by the cost of that.
I would be interested.
I would say something, I have no connection violence or so, but this is being used fairly widely across the GPS. And It's a comprehensive introduction. Yeah, I think myself done some of these. And it is pretty comprehensive. I think it does have some minutes.
Yes, so like I say, that's something I'm happy to explore if we come to consider this value. So, thanks so.
Thanks, Chair. I don't know if this is the right place to raise this, but I just thought, is it not normal for us to agree our annual report, annual accounts at the July meeting? Body?
Yes, so I think that's the bit on the external updates. I can just give a bit of an update on that. So yes, you're right to point out that normally at this meeting, we bring the annual report, you'll be in draft version, but the committee sort of more or less approve it, subject to any changes to audit. Unfortunately, over the last few years, probably since COVID, it's been quite difficult to be able to achieve those timelines for a variety of reasons. One of the reasons is the external audit from the previous year has not yet been completed. So we have been working quite closely with the auditors. I think the previous meeting they come and giving a bit of an update to the committee and board. But unfortunately, due to a variety of reasons, one being that they have taken on the NHS audit around the same time. So there has been a bit of a stretch in terms of resources. It's not been able to go through. So essentially, that means it's hard for us to have a draft version of the previous year has not been agreed. I had asked the auditors to be here to maybe shed some light in terms of what the size of the challenge is, or if there's anything further we can do, but we've not been able to engage them since May when we went on to the NHS audit. So this is the reason why we're also hoping to push that for the September meeting. We'll have a draft for the committee board to approve. Just sort of giving context as to where we are.
And just in terms of the accounts, because there's a legal deadline at which the accounts have to be finalised, presumably before that, they have to be agreed by this body.
Yes, so there's certainly two different things. So there are the main accounts, you have to have a draft by the 31st of July. That has to be published on the website. The regulations do allow for a reasonable reason not to have those done, which we're obviously discussing with the internal teams, mainly the accounting close down team, because it's likely that we're not going to be able to achieve that deadline. The pensions, the annual report deadline is at the end of, I think it's November, is when the deadline is. So if we are able to bring something forward to you in September, we'll still be able to achieve that deadline. So those are sort of two separate things. The pension fund accounts obviously going to be statutory accounts, but the annual report is separate. So end of year deadline.
Yeah. Is there a backup plan just in case the numbers don't come through?
In terms of backup plan, I think we are rather limited just because of how the auditors are sort of appointed. What we're doing is trying to engage in as much as possible. As late as I think last week, there was a meeting between internal officers and the auditors, and they have promised to provide us with some results. But in terms of any other plans, just please make sure that at least on our side, we're closing the accounts as quickly as we can. It will then be up to the auditors to go through the external audit process as fast as they can as well. But unfortunately, there's not much we can do in terms of getting them to progress this faster than where we've done. I think the other thing I'll just point out to that is this is not an issue that is specific to Harrogate. This is a countrywide issue. So if you think about this time last year, the 31st of July deadline, they were only the 8th of September deadline, which is when we're supposed to have the accounts fully audited. There were only 9% of authorities across the country that met that deadline. The last update we did have from the auditors, and maybe not necessarily for the records, because I'm not sure if I'm quoting the correct numbers. I think they said about 55% had actually been approved. So we're not the only fund. I would say we're probably doing quite well in terms of we still continuing with our standard controls and procedures. We're trying to make sure that everything's done as soon as it can. But this is a wide scale problem that's not necessarily affecting us. So I think the government are looking into seeing how best they can solve it, scaling the process of it.
Can we be assured that this is not a problem within the council? That basically it's a problem with the auditors, as you say, because it's a national thing. We don't want to come back later on, or the council's failed to get this done, or can you assure us that it's not any barriers within ourselves?
I can assure you that we have provided the auditors with all the information they requested, and we've not had any contact with them since.
So is it a postcode?
The reason that they're giving us is they're going to do the NHS audit because our audit took too long, so they had to do the NHS audit, which now seems is also taking some time to go through that. So when they get back, again, that'll be a very swift process because they have all the evidence. So I wouldn't expect that to take any further, but yeah, you can have the assurance from myself that me and the team provided them the information that they requested.
Okay, I think paragraph 6.1. That the auditor are due to several external factors. Officers are to actively engage in review. So, I think from that, it's all in written in writing, so we can see what we are really comfortable.
Question from Karen?
Is it possible that I ask a question? Is that possible?
Yes, go ahead.
Oh, thank you. So Tim, in the report, Tim, with regards to the fund manager, I didn't see really a long-term view on inflation, whether we felt that inflation was going to take a longer route before it gets back into control. And if so, I'm glad to see that you are investing in housing. But are there any other asset classes that you're thinking of to mitigate against inflation, Tim?
Chair, if it's okay, I'll probably defer that to Alex and Nessa to maybe provide a bit of the market view.
I think there are a few things to say. The first one is that the market view of inflation has been consistently wrong for the past year. And so if you kind of go back to sort of July, August last year, the market was assuming that inflation would kind of top out about 4 or 5% before coming back down to the 2% target. At every single meeting of the Bank of England since then, there's been an upward adjustment, and we're now sort of anticipating that inflation will top out at sort of 11%. I don't know whether it will continue to sort of go up further than that. Obviously, the Bank of England combat that, and all else equal, you would expect that to bring inflation down. They do have a mandate to target 2% as the level. So all else equal, if inflation is not coming down from the high levels that it is at the moment, they should be raising interest rates further. Now, obviously, the only problem with that is if it starts to tip the UK, and if this happens elsewhere in the US and the Eurozone, for example, if we start to go into a deep recession, which is increasingly considered to be a possibility, then central banks may not have the flexibility to continue to raise interest rates to combat inflation, because that will make things worse and push economies deeper into recession. So central banks are doing an incredibly difficult job at the moment, and the outlook is quite uncertain. That said, I think the balance of risks has changed quite a lot. Bearing in mind how high inflation is right now, I would say there is much more risk to the downside, i.e. that inflation will fall quite sharply, or indeed just be volatile but continue at similar levels to it is today, as opposed to continue to shoot higher. I do think kind of relatively unlikely that we'll continue to see revisions upwards in terms of those inflation numbers, but maybe that makes me a fool for sort of predicting something like that. In terms of our portfolio, what I would say is we do have a strategic allocation to what we would call real assets. So those are mandates that are expected to provide you with protection against inflation, with the example being property portfolios that you have, CBRE and Aviva, and also the renewable energy infrastructure portfolios, because the assets within that renewable energy portfolio should be expected to pass on inflation to the end users of the infrastructure in the vast majority of cases. You do also have an allocation to index and gilts from the portfolio. Now that has had a challenging year, but if you remember last year, when we saw the first spike in inflation in the second half of the year, index and gilts performed very strongly, even though interest rates rose, which normally you would expect to be a challenging environment for bonds. And that's because they do have that explicit linkage to inflation. So that will provide you with some further protection. So I think compared to many other schemes, you are quite well protected in terms of whether there's anything else that we could be doing. I think if inflation is still high, when we come to look at the investment strategy review, absolutely, that should be a theme alongside impact investing and various other things that we would want to look at as part of that strategy review.
Thank you very much.
Any more questions? No?
Okay, so can we note the information provided in section 6 of the report in respect of the activity for the quarter ending 31st of March? This item also has some exempt information which will be considered in the exempt section of the meeting, but both parts are just to note. It's not a subject to it. So we move on to item 9, local government pension scheme update. Can I now invite officers to introduce the report?
Yes, thank you, Chair. So item 9 is the local government pension scheme update. There are a number of schemes, a number of changes that are happening to the scheme where there's a lot of consultation. We saw as the independent advisor to draft up a response, a report, which will be helpful to members, especially those who are new, to kind of give you context around some of the changes that you may expect over the next 12 to 18 months. The report itself covers 5 key areas. The first one is the consultation on asset pooling, which is basically to do with companies like London Civ. There's also climate reporting, which has been ongoing for a while, which should be included in the same consultation, which looks at how the reporting on climate metrics can be not only sort of standardized across local government pension schemes. There's then a bit of a discussion about the Levelling Up white paper and also good governance, which will change some of the arrangements with the local government pension scheme. And lastly, is just an update on where we are with the age discrimination case, commonly known as McLeod. So John has drafted the report, and Chair, if that's okay, I'm happy for him to sort of talk us through some of the details in that report.
Excellent. This is what is somewhat changed in a sense because the events of last week. I mean, it covers 5 issues. The first area of which is asset reporting, climate reporting, and the levelling up whatever. We expected quite confidently some of those 3, possibly all of those 3, to be in the consultation in autumn. The Minister for the response to the LGPS, Kim Baynock, came into post last September. It normally takes a minister some months to become acquainted with the LGPS because it's the person who's also the local government minister. But I think there are some issues in local government, adults and children's service, etc. they might come to before the LGPS. So it normally takes a minister some months. It's good to find out on the 19th of April, Kim Baynock met with the Scheme Advisory Board, which chaired the Scheme Advisory Board and the Secretary of the Scheme Advisory Board. Everything I was hearing, I think everything Tim was hearing, was saying an awesome consultation, certainly on the climate reporting, probably on the assets pooling and levelling up as well. Of course, what's happened in the last week is that Kenny Baynock, Michael Gove, who was the Secretary of State, was dismissed by the Prime Minister. So no Secretary of State, but it's the Minister of State who is the person who really put first. That was Kenny Baynock. Kenny Baynock resigned as well. So having been in post since last September, and having been acquainted with the LGPS, the Minister needs to be acquainted with that issue consultation. She's now gone. So we're waiting a new Minister. I understand Secretary of State at the moment is Greg Clark, who used to be the LGPS Minister some years ago. Can't imagine LGPS will necessarily top in his agenda. So we'll have to wait out until September when the new Prime Minister appoints a new Secretary of State, the new Minister of the LGPS or the Municipal Local Government, who will then take some time to be acquainted. So will we see a consultation? I don't think any of us will know. But I think it's less likely than it was. So all of this may be pushed yet further back. I won't go through all of this, but essentially, at the moment, pooling in many ways is optional. Because if you read the regulations, and I've heard them in all you have to do is commit to pooling. And some funds have done an awful lot of pooling, and some have done very little to prevent it. And at the moment, it's very much a case of if you want to pool, you pool. If you don't want to, you don't want to. The government wants to change that. I think probably more by persuasion than by mandation, because there could be difficulties again legally doing that, but that's likely to delay. Climate reporting is probably a little bit more urgent for the government than anything else in this area. And that's because the private sector schemes have their own regulations issued by the Department for Work and Pensions, And they issued those regulations and finalised in October 2021. They are now in place. And so that is now what Alex is trying to, setting up the 5 billion, we're operating that. And more than £1 billion of funds will be coming in behind and a year behind. If they don't get a consultation out pretty quickly and the regulations finalised by the 1st of April 2023, the LGPS will probably fall another year behind in terms of having to do it. Now, some funds will do it, but even if they do it, they will be doing this based on what they want to do it on, which is probably 5% of it. It will be very similar, same as LGPS. So this is going to create a big issue that we don't resolve it. We have clarity from the government as to what they want to do a consultation, from the respond back and so and they are happy. In terms of levelling up, very important to note that we refer to this in the training. In the levelling up white paper, there is reference on page 162 and 63, which I've quoted there in the paper, to the LGPS. What I have to say is, what the government and asking the LGPS to do, concentration with clarifying this, was to publish plans for increasing local investment. Publish plans, notice you are not, you will, increase local investment. We can't do that, that's an issue you do. So we want to encourage. Local investment, what does that mean? Well, local investment doesn't mean planning day. It's only working funds, it doesn't mean those, it's only need action. The thing advisable definition day was issued with a meeting the day. So what's likely to come out in the consultation is essentially a requirement for an intention, a plan. But whether anyone actually does it or not, again, will be a matter of individual funds. And I'm saying that how funds invest depends on an awful lot of factors. And so it won't be mandatory. It'll again be an exhortation. The other two things, good governance. The one thing I say about that is if any members have been away or are new to the committee, I would commend to them, in particularly the paper I refer to on page 7 there, which was the one that went to the December 2021 committee, which I think explains everything about good governance. I think this is the most important of the 5 issues here, actually, for this fund, because if you look at the LGPS itself, this project is fundamental to good governance for the LGPS. So, I would commend that report in December if anyone wants to understand what it's all about. And then finally, McLeod. McLeod relates to the fact that when they set up the new schemes in 2014, Public Service Pensions Act was an age discrimination. How that happened, I don't know, because the Equalities Act of 2010 banned age discrimination, but somehow it crept into that act. We don't know how. And a couple of legal cases brought this out, and the government said, oops, we need to resolve it. And to actually resolve it, they had to put primary legislation. So they changed the primary legislation to the Public Service Pensions and Judicial Officers Act. That amends the 2013 Public Service Pensions Act, and now they will bring in regulations, and they've already outlined that. I can transfer what they will be to sort of deal with that. There's a lot of technicalities around that. There will be no consultation in July, that's been made clear. Won't be one. That could happen, and probably will happen in the autumn. Because unlike the others, they already know the form of it. Because they determined the form of it back in the 2019 consultation, which the LGPS responded to and was fine. The government came back and said, this is what we'll do after that consultation. So we know what they're going to do. I think in the autumn you'll probably see the cloud consultation come out. You may not see it then. But as we all think of the LGPS, we'll see. I think that's what I'll say. And is there any questions? Questions?
Yeah, I've got one. Yeah, apologies. This might be slightly tenuous, but I did promise somebody that would bring it up. But in your report on the pooling issue, you mentioned a 2022 Supreme Court case. Is that the case that you talked about in your report a couple of years ago that was brought by Palestine Solidarity Campaign? It is. So all I wanted to ask was, we discussed your report a couple of years ago, and I suppose my question is really for Tim. There were a couple of actions that came out of that meeting, and I'm just wondering what happened to that, because I think not just the pension committee members, but also other councillors have been getting a lot of emails about this. So I think in order to respond effectively, we need to know what happened following the decisions that were made at that meeting. And what I noted down from the minutes were that we would contact the Palestine Solidarity Campaign to supply the names of the companies that they claim were in contravention of international law, inquire with fund managers about any companies of that kind that we were invested in, and have a look into whether there was any list that existed similar to when there was a campaign to divest from apartheid South Africa. So those were the actions from that meeting. So just to kind of follow up on that, just to assist us in responding to residents.
Yes, so I think the first thing I'll probably point out is, we are receiving quite a number of those member inquiries, and we are preparing a response that summarizes those actions that the Purchase Committee has made. A quick update I can provide at this meeting, following that particular meeting, is yes, we were able to identify the list. I think there's 112 companies that are named. We actually inquired with the investment managers, and we were able to identify 12 at the time. I think it was sometime last following on from that meeting. And the approximate allocation to that was about 3%, was about 3 million, sorry. So that was 0.21% of the fund at the time. Since then, one of the key things where we identified these companies were in our passively managed index funds, which I think you mentioned around whether should we provide training to members around what that actually means. The difficulty with sort of excluding those companies is because essentially these passive funds track those indexes, and those indexes will have an allocation to those companies, albeit it might be rather small. So at the moment, it will be very difficult for us to set sort of an divestment policy or anything of that sort without us sort of taking, as opposed to divesting from that. And obviously, if the priority for the fund is again to make the returns, that will be a challenging investment case. What I can point to, though, the actions that followed on, I'm not sure if that was that meeting or meeting after. One of the things that the fund asked was for the local authority pension fund forum, who we are members of, to engage on our behalf, to understand the issues a bit more and see if there were any actions that were appropriate for us as a fund to take. So the latest update I have on that is the last we've actually met with my colleague, who I understand is the UN rapporteur, so the man who sort of publishing the research and made up the list of the names. And they met earlier this year. They have had initial discussions. My understanding is the meeting was productive. We haven't received minutes from the meeting, but the scheme advisory board had mentioned that the meeting was really productive. And they have agreed to meet with them again to agree a path forward. So as officers, we are monitoring that closely. And once the scheme advisory board advises us on the nature of that discussion, I think the discussion of wide ranging from what constitutes a company to be on that list, to how a company comes off that list, to what level of engagement response we should be taking. I understand that they did sort of mention to him how the LGPS scheme works. I think he's familiar with that. So that is where the issue is at the moment. So we will be drafting a response, which I will also check with the chair to see if she's happy with that response, and we'll be able to share that with any members who are receiving inquiries from the group.
Thank you very much, Mark. Great.
That's all.
Can I ask a question?
That's all I was first. I think that.
Okay, thank you. So my question relates to the asset class. So half of all the investments are in equities, and rising interest rates can suppress equity values. So when is the next moment where that allocation, that decision is evaluated?
Maybe probably it's fair to Alex again in terms of whether our allocation is probably exposed. How we are looking at it, if we are happy with where the allocation is the next thing that's going to be key on the agenda will be the triennial evaluation. That will again give us an understanding of what funding level is and our required return for the next 3 years or so. On the back of that, we'll have a reassessment of our investment strategy, which the committee can agree. This will probably come to one of the early meetings early next year, so it will be a general meeting or a March meeting at the earliest. But if there were concerns, which maybe Alex can give us some reassurance, if there are concerns, then the committee can act in between them.
Yeah, no, I think it's clear that the equities that we had in the portfolio have suffered this year as a result of rising interest rates, which in and of itself is a reaction to rising inflation. So US equities, for example, in the first half of the year lost about 20%. Now, we have reason to believe that our assets would have done quite a bit better than that, we hope. We do have, for example, an allocation to something called fundamental indexation, which doesn't weight companies by their size, it weights companies by a range of other factors. And that style of investment, although it's passive, has outperformed. We also have quite a lot of exposure to overseas currency in our sterling. Sterling has gone down quite a lot against the US dollar. And so the investments that we hold in the US dollar and other major currencies that have appreciated against sterling, we've got a kind of boost from that, which has helped to offset some of the negative impact we've seen in terms of equity market returns. Now, as Tim said, the logical time to look at the strategic asset allocation in the round would be as part of the strategy that we have planned. That said, for the LGPS, because we are long-term investors, it is highly likely that equities continue to play a significant role, because generally we would expect them to have the highest level of expected return, certainly out of liquid asset classes for investing. And that is required in order to maintain our high level of funding that we have and ultimately to pay pensions that we do. Now, we do diversify. We have half of the portfolio in things that are not equities. That was a lot lower when I started working at Haringey back in 2013. I think it was probably close to 80%, something like that, in equities. So that has gone up. That does provide us with some diversification and protection. And I think that's demonstrated by the fact if you look at the Q1 return, which we didn't necessarily comment on earlier, we were only down about 1.3% or something like that at Q1, despite the fact equities suffered significantly worse than that. And some of those diversifiers which we have in the portfolio are driving that forward. So I guess what I would say is I don't think there's any reason why we would take action ahead of the strategy review, because we are long-term investors. We do have a balanced portfolio. We do have a diversified equity portfolio that provides us with some protection compared to just what's happening in the market. So I think we're in a relatively robust place. And so we can afford to wait until we're looking at everything from around in my perspective.
Yeah, I just wanted to ask a question coming back to the Matt asked, which is about these passively managed index funds. How are they administered? Like, what is our process for kind of signing up to them? Is it through the NAP that fund? Is it kind of independent? We've chosen funded.
Yes, so essentially how the pension fund has its managed its investment managers. We have investment managers who we delegate the authority for them to make the day-to-day decisions and what stocks they pick or how the fund is managed. This particular passive funds, essentially what they do is they track an index. So there's an index provider who comes up with what should be included in the fund based on their methodology. So in the case with a low carbon fund, will be their carbon footprint. We then have an investment manager called Legal & General, LGIM, and they sort of manage that whole mandate on our behalf. So what they're trying to do is track that index as much as possible. And yeah, the difference usually should just be the cost for the administrative fund. So Legal & General has been with the fund for a very long time. I think we've had several different types of equity investments with them. The current iteration which we have is about 3 different strategies: one in low carbon global, and MSCI low carbon emerging markets, so that's focusing on emerging companies, and then the other one is the rapid growth factor. That's all managed by Legal & General. So essentially, they go through the same appointment process where we select them based on their investment ability, and we monitor them on a quarterly basis and present information to the client.
Any other questions?
So can I now, excuse me, can we note the independent advisors local common pension scheme update paper pending to monitor. And go on to item 10, the formal plan.
Thank you, Chair. So, this report, essentially is looks at the forward plan, which is the plan of the patrons that we plan to bring to this committee over the next year or so. Members are obviously invited to comment on those plans, whether there's something that we have missed that you'd like us to include, particularly generally on the agenda or on training and needs requirements. And one of the things we have mentioned briefly in passing is the need for sort of different types of training. I think the findings has been sort of brought up, which we can discuss a bit further. What I would ask members to comment is on page 37 of these papers. There is a members' training needs assessment. And given that this is the first meeting of the new pensions committee and board, I'll ask each of you if you could please complete that and return it to Fiona. What that allows us to do is we are able to identify the key common needs across the group of training requirements, which we can then incorporate into this forward plan. In terms of the first appendix on Appendix 1, that is a forward plan as we have prepared it. Like I said, it's welcome to your comments. If there is something in there that you think we have missed out that we should include, please do let us know and we will add it onto the plan for the future. Happy to open up.
So do you want people to fill this in this evening? Yeah, or nice to get it in online and email?
Whichever is more.
As soon as possible, I guess.
Sorry, just to for the minutes, our members happy with this forward plan and what I include in it.
I have no suggestion. No suggested amendment.
No,
That's address.
okay, we'll go on to item 11 then, the risk register. And can you introduce the please?
Yeah, thank you, Chair. So the item 11 is the risk register. So we present the risk register again on a quarterly basis. Previously, we have different types of risks for the pensions committee and board to sort of comment on. At the moment, there is obviously heightened risk in terms of like investment markets. So we thought this meeting would bring this again. Also, this is the pensions committee and board. Some of the discussions we've already had to date, I can tell that there's a lot of focus on what's happening within the markets. So the key thing to sort of highlight in this report on section 6.4, it just shows about how the scoring is dealt. The scores are subjective. They are made by officers. If members feel the risks are not being rated accordingly, please do let us know and we can sort of put them to the forefront of our attention. The two key risks that I wanted to highlight to members is one that we've discussed already extensively in this meeting. The first one was on high inflation, which appears to be persistent. And Vanessa had given us some comments in terms of what the long-term view of that might be. And just the action to comment that we have already added extra to our property allocation to make sure that we at least have some level of inflation protection within the fund, but also that the fund is quite diversified with different manages. So that's a risk that is high on our radar. It's something that we actively engage with the fund managers in terms of how they're managing that risk within their own portfolios. The second risk to add, which I think has also been briefly mentioned, is the increasing risk of a market downturn. So this is a new risk added to the fund. Because previously, this is not something we thought was high on the radar. So just to again highlight to members that this is a new risk we've now incorporated, and as monitors we're continuing to monitor the situation. And should we feel that there is significant action to be made, we'll be in consultation with MESA and we'll present options to the pensions committee and board. Other than that, I'm happy to open it up to comments on any of the other risks contained in the appendix.
That's just the general question. So first of all, it's kind of for me, this is a new way of looking at this. We've got two risk ratings for each risk. We've got one on the left-hand side, which is generally higher, and then some information about the force mitigations in place, further action, and then reduced risk score. So could you just clarify, is the one on the left the current risk score and the one on the right the potential future one once the those actions have taken effect, or is it that the first one is a previous risk score, and now we rate it as the second one because we've done those things.
Right, yes. So I think you said probably what things, so maybe I'll put it in a slightly different way. So the first one is the risk if we did absolutely nothing and didn't react. And then the second one is if we put in this control, it reduces the risk. So the controls do reduce the risk, they don't necessarily eliminate it. But sometimes if we did like a massive control, the risks would then become further down. So in the case of, let's say, for example, with inflation, if we then done something specific with inflation mandate, that risk of inflation will reduce. But also the controls of us continuing to monitor it should reduce that risk. But like I said, that's open to comments. If you do feel that the actions I would put further do not reduce the risk, then maybe we need to consider further actions.
No, absolutely. I'm just checking. And these, what it says, controls and mitigations and further actions, these are actions that officers are committing to taking. Yes.
Yes, absolutely.
Absolutely. Okay, just to clarify. And just further, if that's okay, Chair. I'm also more used to seeing, so what we obviously at every meeting we pick a particular type of risk and we focus on that. But previously, I've seen the full risk register provided in the papers, just so that we've got an overview of how those other risks are changing. We can highlight any particular significant risks that aren't necessarily in the area that we're focusing on. Just wondering why that's not being included in the papers.
I mean that's something we're always exploring. Also, we have to bring the risk register. I think the idea is once we focus, because the risk register itself is quite long, it can take quite a substantial part of the papers. So again, initially, I mean, probably Thomas might shed a bit more light on it. Initially, the idea was like you focus on the risk and bringing different types of risk, then you have oversight of the entire risk register. These are risks that we're actively managing and reviewing on a day-to-day basis. It's just we present to the committee for comments. But yeah, I'm sort of open to members' comments if they felt that they hope to have the entire risk register.
As you said, Karen, like to sum up, not the entire risk register, so maybe just some of the points presented here along with the area that's been specifically focused on. And as Tim said, I'm sure we could revert back to including those in the papers if that's helpful. It will make them quite lengthy. Is the point that Tim's on.
Thanks.
Also, other people think. What do you think, John? I think we should have a bit more debate on this year.
I think a specific risk, Chair, that I wanted to ask about.
Go ahead.
Just because it was our number one red risk at one point, which was about the frequent turnover of elected members on the committee. I'm not sure where we are with that one. So it has been rather, again, frequent turnover of elected members in the last couple of years.
Yeah, it's interesting. The last two councillors who mentioned this didn't get elected.
At least I'm here for another 4 years.
I'm just saying, that's the nature of people who get elected, isn't it? Now you can't guarantee against that.
Well, if you'll allow me, Chair, there was originally a commitment on behalf of the chair that included me and the chief whips of the two political groups. And that was reaffirmed by the chief whips of the two political groups 4 years ago, to do everything in their power to keep the membership of this committee as constant as possible over the 4 years between elections. That would stop this. Otherwise there might be. It was considered, I think, as part of the such a high risk that it might be necessary if that didn't happen to amend the constitution to make appoint pensions committee four-year appointment. So I'm just wondering where we are with that.
So Fiona Ray, acting committee manager. So the pensions committee board chair on behalf of the pensions committee board did write to the chief whip 7 months ago before the appointments were made, asking that there was continuity of members. If you like, we can write to them again. It might be an opportune time sort of before the annual general meeting when ships are decided. And of course, all the members are here as well. The Stephen meeting will be here. So that's what, yeah, we can absolutely reiterate that to chief whips and
There's the chief whip change.
yes, so we can send it to whoever's the chief whip or the leader.
But as you can see, Matt, you know, I mean, you've been on the committee before, John's been in before, I've been in before, so we are trying to have some consults. And also, I think it's important to have some new members as well, so that we increase the number of people who know and understand about the subject. Councillor Carrion, would you like to say?
Thank you. Hope you can hear me. I missed some of the conversation earlier, but I wanted to go back to the risk register, please. In terms of your color coding, your RAG rating, red, amber, and green, can you tell me in terms of the red, how often you review the red RAGs? Is there a time scale as officers you review them?
So I would say we're constantly reviewing them. This is not like a one-off exercise. This is something we're constantly looking at those risks and sort of adjusting them. All we do is then we bring the current risk register as is to the Pensions Committee and board. So I think you'll see on this report the latest rating was as at the end of June. So that's the last time we sort of looked at it and said these are the risks. But we are obviously looking to manage this risk on an ongoing basis. At the next meeting, those risks might have changed if the situation around the markets has changed, but they might have also stayed the same. What I'd like to point out sort of in the summary is those risks that have changed in a material way for members to comment. But again, that's why I always invite members, because this is something that we are doing as officers, and there might be some bits that we're not picking up. So we welcome members' input into areas that we should pay more attention.
That's the ones. Yeah, I mean, I was saying, I mean, for 4 years. I wanted to ask specifically about one of the investment risks around increased scrutiny on environmental, social, and governance issues. Is what you're saying there that there are potential funds which may not comply with legislation and guidance that is coming in or currently exists? And if so, could you clarify roughly how much is invested in, say, or other that may increase the scrutiny in the future?
Right. Okay. So I think to clarify, it's more about the likelihood of new legislation being brought in. So it's not necessarily a legislation that already exists. So we know that this legislation has been likely to be introduced around climate agreement, for example. So how would that impact the portfolio? In terms of our current portfolio, I think I saw mentioned some of the current controls in place, some of the investments that we've invested in. So we've got the Rapid Multi-Fund Climate Transition Fund, which reduces carbon emissions by 7% annually on the Paris Agreement. So aligned, but we also invest in renewable infrastructure. There is obviously a big chunk of the portfolio that at the moment we don't have a clear picture as to what the actual carbon footprint of that is. And some of the stuff that John was talking about in terms of the consultation of climate reporting should include that. So the risk is more around if it includes that, if our portfolio will not be able to change in a big way, I would be able to make decisions around it. So that's mainly why we put that in there. And James pointed out, it's something we're actively engaging with the Scheme Advisory Board on whenever that consultation. But that just to flag to members that this is something that could come sooner rather than later. I don't know if that. So
yeah, we just say we have done analysis on carbon footprint of the total equity portfolio in the past, and it has come out pretty good because we have got things in the portfolio that are explicitly low carbon, and that's another area that we might want to look at as part of the strategy review, even if there isn't a consultation by that stage, just to understand how that picture has changed since we last did that analysis.
that answers your question.
Yeah, I mean, it's kind of broad, but is there ways which we can have like specifics in terms of like how much money is invested in fossil fuel companies, for example?
So the fund doesn't have any direct investment in fossil fuel companies. In the indexes, there might be some exposure, but we'll have to request that information from the fund manager. So I can provide this committee with that information if that would be helpful, but we'll have to request it from them. Yeah, so I can do that as a follow-up action.
Any other comments? One on screen.
On the screen.
Yeah, it's Councillor Ankara.
Councillor Ankara.
Oh, hello again. Thank you. Just a follow-up question from what Tammy had asked. In terms of corporations that pay their fair tax, corporation tax, have we looked into specific companies? Because we have been written about this as elected representatives. I know it's difficult to look at every single company, but have you considered looking into this matter?
That's one of the issues that's encompassed by ESG issues. What is the company's tax policy? Does it find avoid tax? What shall I say, unethically? So that's really combined up with all the other ESG issues. There's a thing to be looked at. We discuss those really, I think.
Yeah, that's addressed through the engagement undertaken by Legal and General as your investment manager, but which you as a committee do monitor through the sort of LAPF side of things. So at the moment in our equity portfolio, the only thing we are positively tilting towards are lower carbon companies from an ESG perspective. There are strategies out there which do tilt towards a broader range of factors. So some would be on the social and governance side as well, for example. But at the moment, they're that tilted. It's more on the engagement side.
Yeah, like the only thing I'll add is we've not specifically had any sort of those inquiries. There's not something that's been particularly on our radar. Comes in anything that we come across that.
To answer your question. Okay.
Yeah, no, it's quite difficult to hear everything, but I'm sure I'll read it in the minutes when it comes back. But don't worry. Yeah.
Well, apologies.
Okay. Shall we move on now? Can we know to provide any comments on the pension funds risk register and the area of focus for review at the meetings investment?
Sorry, Chair, can I just come in?
Yeah.
I think there were a few actions that came in from that. So can we just maybe have confirmation of those actions? I believe the first one is you'd like a more comprehensive or a summarized risk register to come to every meeting, which I can look through and have comments for next time. And the second one was to provide some metrics on the possible exposure. I felt it's like up to those again.
I think in that summarised risk register, we can just summarise the kind of key red risks. If there are any other red risks in
the other elements.
In the other elements.
Take that forward.
Going to item 12, local authority pension fund forum voting update.
Thank you, Chair. So this item again is for members to note. So I think we've talked about the local authority pension fund forum quite extensively already today. But just as a bit of a reminder, they are a shareholder group that engages on our behalf as members to encourage best practice on company boards. So they actually actively go to company and engage with company leaders, but they also issue what they call voting alerts that basically instruct all those who are members how those assets should be voted. So in this report, we do provide a summary of the key voting alerts that come up during the quarter, and also point to how the Legal and General vote where they may affect manager within our portfolio. So the key thing to summarize is a lot of the engagement that LAP did within the quarter was on climate change issues. I don't have the exact breakdown of what all these issues are, but this is on their website. So if that is of interest to members, I encourage you to have a look at that. And then the only voting alert that they issued was for Rio Tinto, which was basically on their climate action plan. LAP did not feel that the plan went strong enough, so they decided to vote against the plan. And LG also agreed. However, the outcome of the vote was the plan was still voted through. to just summarize this.
That's more of a comment, no question, really. I mean, on the voting of those, I've always looked a little bit depressing, really, because, you know, presumably that local authority pension chairs weren't very happy with Rio Tinto's climate action plan, didn't think it was think it was strong enough, so they advised that their investment managers opposed it. Looks like Elgin went along with that, and as usual, didn't really make any difference to the outcome. So I suppose it would be nice if we could point to some kind of positive results of some of this engagement. I know, you know, Rob Chapman and John Gray and other members of the LAPS executive regularly meet with Michael O'Leary, for instance. You know, it would be good if it would be possible in the report to point to some tangible positive change that you know, for instance, to Ryanair cabin crews working conditions that results. You think local authority pension funds must have some point of working all together. Maybe not, but it's, yeah, I don't know. Sorry, it's just a bit of a.
No, yeah, that's a
Could you also explain the voting of that? I don't understand it.
So essentially, the voting alert is at every annual general meeting for a company. They allow their shareholders to vote on a series of sort of resolutions. So this was just one out of, I think, in this particular meeting, there were 11 resolutions. Some of them are like electing board members. So as investors, we have a right to vote according to the shares. But because we have our shares passively managed, which means we don't actually directly own the shares, we own the index, we instruct the index provider to vote our share in line with our views. So what LAPS do is they write to us, and then we instruct them advisors to do so. Sometimes Legal and General don't always go along with LAPS recommendations, and there's sometimes good reasons for that. It might be that they feel the plan is actually, they've done quite well to come up with a plan. If it was someone who's been refusing to come up with a plan for like a long time. So essentially, this happens like once a year, but it happens to all different types of company. Just on Councillor White's comment around, yes, sometimes it doesn't seem like the voting is working, but in some of the reports that we've done, it's actually they voted against reports and companies have had to issue them again. Some of it depends on the particular structure of the company. If the company has got like a leader who is quite a large section of the company, it's hard to get a vote, but at least putting the pressure and approaching them is actually doing something in terms of like improving that the operation of that company. And Rio Tinto might be one of the good ones. Like there's a case study as to some of the engagement they've done, particularly on the mining side, which I think is quite good. But yeah, so I take that as a fair comment to probably bring some more light to the positive study that we do.
Yeah, I mean, it's not really depressing if you think that, because these companies, the local government funds may only own 10% of the shareholding in total. There might be Eastern and wealth funds that own 20% of the company, or some big pension fund owns another 5% of the company, and we don't control how they vote. They vote whatever they decide. So for us to win a vote, it's going to be quite rare, because all the other shareholders in that company, or the majority of them, would have to agree and vote the same way. So it's, but we're still making the point, though. You know, we're raising the issue and making the point, which is good, you know, and that does that when it meets all the company directors and chairs and all that type of thing.
I think both Councillor Bevan and Councillor White have said actually said something very positive involved to that. Councillor White referred to the meetings with people like Michael O'Leary and the chief executive of Rio Tinto, etc. And that's absolutely correct. Councillor Bevan correctly pointed out that, you know, the LGPS is usually a minority shareholder. The very fact that it's quite a significant minority shareholder means he gets that access that Councillor White has talked about. And of course, that sort of influence isn't always seen in votes. It's the same thing as with, you know, an LGPS consultation. The government will decide ultimately they consult and they may change their views. So I think we're both right. The soft influence of that which we perhaps can't always definitively write down, is there. I think if you read a lot of reports, and the government will be aware of these, you read some of their reports, I think you can see some of the soft influence there. So the soft influence is really important. So I think we shouldn't underestimate the soft influence. And to get 30% in Rio Tinto, I don't know who owns lots of it, but I imagine there's might be some people who aren't quite as say forward thinking as the LPPS are on some of these issues, yes. So I think 30% probably wasn't bad, and it's flagged it up as a big issue. And that's the thing, also, even if you lose, or the way we vote, I think flagging things up over time they change.
I think just to add a little bit more context on that is even to get Rio Tinto to do a climate action plan, they had to do a resolution that passed. And most people they thought that's a very sensible thing for a company to do. Or we might have different views on ESG. So the plan itself has been voted. The reason why it's not been voted through by LAP is they didn't think it was strong enough. But it is a step into the progression from not having a plan. So I think that that might be something that's missing in there, but there has been a progression to get Rio Tinto to a point of coming up with the plan.
Okay. Shall we move on to the next item? That's item 13.
Right. So, which one's item 13?
It's the additional item, isn't it?
Yes.
So we've got it in two places, haven't we? We've got it in the exempt.
It's in the supplementary agenda.
It's in the supplement, yeah. It says agenda item. Yeah, like business sheet.
Right. Have we wanted to introduce the report, Jack?
Should we just wait a minute for
Oh.
that summary?
Sorry.
You felt it. Not very confident about what she belongs to. Oh, okay. Okay. Oh, so just introduce it.
Yeah, I'm just introducing it.
Okay. Okay.
Thank you, Chair. So item 13, the last item is the Pensions Administration System Contract Award. So the reason why we are bringing this item, I think was one of the edit items for discussion, is the current Pensions Administration System is due to expire quite soon at the end of the month. And this committee has got the power to sort of agree the decision that officer recommended in terms of who to appoint to manage the system going forward. The pension administration system is actually quite an important part of how we administer the fund. This is where we keep all member records. This is where we run any estimates or retirement benefits or anything that's required by members is all managed within the system. So the system itself, the previous one has been procured for a period of 5 years, so that term is coming to an end, and we're looking to extend it in the next for the next sort of 7 years. So given the context of this report and some of the sensitivity around it, because we haven't actually notified any of the providers, Chair, if it's okay, I'd like for us to have this discussion in the exam part of the meeting, and we can have a more
Yeah, that's fine. Then we go on to item 14, which is new items for urgent business, and there's none. Item 15 is dates of future meetings and to note those. And item 16, exclusion of press and public. We'll now be considering items 17 to 20, which contain exempt information. We'll be moving to exclude the press and public from the remainder of the meeting to consider this exempt information as defined under paragraphs 3 and 5, part 1, schedule 12A of Local Government Act 1972. Is the exclusion of the press and public for these items agreed by members? If anyone has any comments or objections, please, done that. Otherwise, I'll take this as agreed. This has been. Thank you. That marks the end of the public section of this meeting. We'll pause while the recording of the meeting stops.